Hope you guys are all doing well. Today we're going to talk about volume profiles, what they do show you and tell you, and what they don't show you and tell you. Trust me, I made every mistake in the book. I have faded the high volume nodes just because it touched a level. I have ran through with low volume nodes. I've done it all. So in my experience, this is what I've kind of learned. So let's get into it. So, what do volume profiles actually tell us? Well, it identifies where the majority of the volume was transacted, highlights where value is being accepted, and where the bulk of business is being conducted. So, basically, where high volume is being transacted or where they're liking to do business, okay, and where they're not liking to do business. And what it doesn't tell you, it won't tell you the future direction, timing of a reaction at a given level, whether that level will hold, whether buyers or sellers are in control. I know, trust me, I made that mistake thinking just because we reached a certain point, that price will reverse, but it doesn't. And also, we don't know the intention behind price. We don't know if buyers are closing their positions or if sellers are covering their positions. We will not know that. There's no way of finding out. We will never know the intent. Only thing we'll ever know is that there's high volume being conducted there. That is it. Okay, so there's three shapes. There's P, B, and D. P usually means, it's a P shape. A lot of the high volume is being done at the top. It could be short covering, aggressive buying into the highs, and it often means that there's a rally and the sellers ran out of control. It often means that. Doesn't mean that it always means that, okay? Just because we're building a P-shaped profile doesn't mean that price is gonna fly from there, okay? Next is B. Now again, B, low volume at the top, high volume at the bottom. Most likely sellers are in control and they will try to break the bottom. Again, just because we have a B profile doesn't mean that price will break down and that we're gonna keep selling off. D shape, heavy volume in the middle, we're balanced, two-sided. Usually what it means is you can fade the highs, value your highs and value your lows. You can look for some sort of reactions there. Okay, another thing, inside day versus outside day. The current day opens up inside prior day's value. We can expect fading the highs and the lows. Okay, there's agreement in price. No new information has been given. It's rotational, two-sided trades, balance. They like doing business there, and that's just in basic terms. They just like doing business between those prices, between the highs and the lows. And outside day, new information positioning has shifted. Higher odds of a directional trending session. Wait for order flow to confirm before fading. Again, just because it's outside day does not mean that price will not come back inside prior day's value. And just because it's inside day doesn't mean that price will go outside value. Okay. Now let's get into the nitty gritty. This is the daily profile. Okay. On the 15-minute chart. So as you can see, this is P shape, right? Most of the volume is done at the top. Point of control is there, right? You can kind of see the next one as a B shape, right? Most of the volume is being done at the bottom. And for a D shape, I think this will be a good example right here. D. We're pretty balanced. Okay. Now, just because it's P shape doesn't mean next day we will open and go higher. This is what I'm trying to tell you. A lot of people are spreading this misinformation. Just, P shape, that means we'll keep going higher. I mean, yes, there is a higher probability if price is being accepted at the tops, we will go higher. And now look at the B shape. Just because we're at the bottom does not mean that we'll keep going down. Okay, you have to have some confirmation within price, and you gotta know your fundamentals, like, hey, what's happening throughout the day, throughout the week, if there's any news, and then you can make a judgment. But in my experience, just because it's P, B, or D doesn't mean that we're gonna follow suit. So this is the same image that I showed you guys before. Literally, I do this every day. This is how I kind of like to read it. I don't like overcomplicating things. Markets are already as complicated as it is, and I don't want to complicate any further. So what I just go in by usually just mark out value area high, mark out value area low for previous day, and also current day, mark out value area low and value area high. Usually what price will do is we would like to, usually price will test the current day's value area low, and it'll test the previous day value. Are we going to accept prices in there, or we're not going to accept prices? Literally, this is what I do. It's so simple. Okay, most of the majority of the volume was traded up here. So what can we expect? We can expect some kind of reaction, right? And also another thing to look out for is this. You got low volume nodes right here. What are high volume nodes and low volume nodes? Literally, high volume node is a price where level where a large amount of volume was traded, both sides showed up and agreed to price was fair. Low volume node, a price where very little volume was traded, the market disagreed on a value and moved through quickly. Okay, high volume nodes, low volume nodes. So this will be a high volume node. Why? Because there's a lot of volume being traded here. Okay, this will be a low volume node. There's a gap. Look how fast price is moving up, how fast price is moving down throughout that. Okay, I will look for these areas and see how price reacts from there. And I know a lot of ICT guys, and when you get into liquidity, this makes it even better. What are we doing here? We take out this high, grab some orders or liquidity sweep, whatever you want to call it, get into value area low, try to accept these prices, fill this imbalance, and react from there. Okay, you could catch a trade from there, literally, or we get back where? Below value area low for the current day, see how we behave here, and try to trade it back into value. It's just literally simple as that. So look at next day what happens. Okay, we fail to break below, we open inside this value, means we like doing business in this area. Okay, we opened here. I think the open is somewhere around here, right here. And again, what do? We mark out previous day value area high, previous day value area low. And look how current day's value area high and value area low matches up. We literally look for signs of, well, you could even caught a buy from here, from this value area low, targeting yesterday's value area high, or you could have shorted again from value area high to value area low. Look previously pre-market how we rejected these prices, okay, to get back into value of yesterday. And this is just a rotational day. I mean, you probably got so many opportunities here. Fade the highs, fade the lows, back into value. I mean, it doesn't get any more simpler than this. Next day, what happens? Next day, same thing. We mark our previous day's value area high, previous day's value area low. We try to break below yesterday's value area low. It doesn't work. Get above it. We get above, test the value area high. Okay, we reject that. Now we're also rejecting value area low. You could look for a move up to yesterday's value area high again, and it's just again and again from value area to value area. Okay, then what happens? We make up. Now again, this is all in hindsight. I get it, but the point that I'm trying to make is that it's just shifting from value to value. That's it. It's not doing anything else. We close up here. You can also see this is a P shape, right? Point of control and value area high is up here. What do I see? I see that we got point of control here. Okay. Value area high. Where do we open? We open, we try to break outside of value. Look how fast we break back into value of yesterday. We touch the point of control. We like these price. We don't want to break below it. Then we reject it and we go back into current day's value area high again and again and again and again. It's just from value to value. Simple as that. Also look at how point of control is shifting up, okay? Look at this. A little bit lower, it stays the same. Higher, 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 lower. This is where we see a change, okay? Another thing is that price will create low volume nodes such as these little pockets. We could get some nice reactions out of it. We don't know when we'll get it, but these are low volume nodes. Price will fill it and either react down or up. Now, if you're looking at this as a current session, just this price action here, this will be a low volume node as well. Look how fast price moves up, break back into it, shoot up again. Now also again, if you're looking at this will be a low volume node as well. We will fill it and either go higher or come back underneath it. So this will be your, as ICT likes to call it, fair value gap. Now, another thing is that just because, previously we have these high volume nodes, it doesn't mean that price will come there the next day for sure and reject from there. I mean, look at this. Next day we open right about here. We don't even come in, we don't test it, we just fall before it. So you kind of just have to see on that day where the price is giving you a reaction from, right? These are just high point of interest areas. Usually what I found is that it makes more sense to fade the high value value area highs and value area lows. I mean, that's what's working best for me. You guys can back test this. I mean, you guys will see what I mean. There's no point complicating it. I mean, I can keep going showing you again and again. Right here, we break this, we break out of value. Now you look at this, this is not a P, B, or whatever shape, right? But we know price didn't like doing business here. We traded, look how fast we traded out of it. All right. You can kind of mark this zone right here as a high volume node. And just because don't mark high volume nodes like that, mark a good area, right? We can never be precise in the market. We like doing business here for a bit. Price will retrace back at some point and give you a reaction from there. Like look, right at market open, we got a reaction from here. And also, if you want to call it order block or whatever, right, you can see that this does line up with that as well. What do? We induce price thinking we're going to go higher, but we actually break down back into value. And it's just a rotational game again and again. Look at this. Next day, what happens? Previous days, value area low. Previous days, value area high. What do we do again? We come back into yesterday high volume nodes, so to speak, or in that order block. We induce these people thinking we're going to go higher. If you can find some nice entry point, you can cast some really nice trades back into even the point of control or value yellow. I mean, you don't have to cash this whole goddamn move to make money. You can just cash 2R, 3R again and again, again and again. The more you read it, the more I read it, the more we'll progress with this. Okay, now look at this. What happens the next day? That's the previous day value area high. This is the previous day value area low. What happens? we induce these guys thinking. You could call it stop run, you can call it whatever you want to. Okay, we come back into previous days value, or we try to test previous days value area high, try to break it, we don't accept the prices, we fall right back into it. I mean, look what happens here now. Where do we open? This is the value area of yesterday. We open right here. This is our opening right here. We open inside prior day's value, mark out previous day's value area high. We induce these buyers or sellers from yesterday thinking price is going to keep going higher. It doesn't. We test the value area high. It won't touch. Sometimes it won't even touch it. Like, look, it doesn't touch the value area high, but we get near it and we rotate back into the prior day's value or current day's value. You can target today's value area low or whatever your trading model presents. Next day, what happened? We got the value area low and we got the value area high. Now look, we opened somewhere here. Again, nothing. We opened inside the value. We tried breaking below the value. We're failing to accept prices lower. We go high back into yesterday's value area high. Look at the reaction we get out of it, trapping these sellers to go even further. But you could cast some really nice moves with this. So hopefully you guys learned something. Like, follow, share, and subscribe for more. I even run a small community. Come join us. I'll see you guys in the next video. Thank you guys. Take care.